Welcome everyone for joining us for a technical deep dive into underwriting software. Just a quick introduction of what we do. So I'm Perry Zhang. I'm the founder and CEO of Cashflow Portal. And we provide a all-in-one solution, a technology solution for commercial real estate. It's a quick introduction of my background and the company. I was a software engineer, worked at Amazon, Twitter, and Lyft. Joined Lyft when it was 300 people, left when it was 3,000. So made my first money there, then got into syndication. On my very first deal, we did a 172 unit apartment, raised about $4.3 million. And that's when I found the lots of logistical work of signing documents, sending wire instructions, and so on. A couple of years later, I quit my job to start a company. And a little bit about us now. We have about 800 plus GPs, customers, and about hundreds of thousands of LPs. Outside of the investor portal, we want to basically fundamentally change how commercial real estate is operated, is being done. So we started with the investor portal. Now it's a very mature software. And we got into other stacks of the capital raising and the operations, such as a fully built out CRM that basically you can replace ActiveCampaign and HubSpot and so on. And we built that from scratch. Then there is the underwriting software where we're gonna spend the majority of time today talking about. And that is usually at the beginning of a customer's journey where they need to quickly underwrite a lot of deals and with precision. And then you can turn that deal into a deal, or you can turn that into a CRM, like an email that you can send out for marketing purposes. And so this whole life cycle from end to end for a GP, commercial real estate GP. We also have fund admin, which is when you need to scale in the future, you can create a fund easily, and all your syndication or your funds live in the same portal with the same account. And that allows you to do bookkeeping. We have an internal bookkeeping partner with a CPA actually. And then we have a fund admins that will do the reconciliation on your behalf. So this end-to-end, going from underwriting your deals, making an offer, to advertising or marketing your deals, to raising money through the same software, and then going into fund admin. The last thing we are launching in a few weeks is asset management, where you can download a bunch of things from different property management softwares, and then you have this command center of your financial data across all your deals. And so you can do things like, refinance analysis, or you can do budget variance, renovation tracking, and so on and so forth. Okay, so that's a little bit about us. Now that we have most people in the room, let's go and talk about underwriting. So on underwriting, I mentioned this last time, so I'll go over this quickly. Underwriting is like exercising, and the more time it requires to exercise, the less likely folks are less inclined to do it. And you get these OMs and brand roles from the brokers all the time. And so, and usually it takes about 30 minutes to just crunch the data. We want to make that 30 minutes down to less than 5 to 10 minutes, okay? And if you can reduce that, then you can quickly make a decision and move on, right? I have seen lots of underwriting deals at this point, and accuracy is actually one of the things we pride ourselves on. A lot of the spreadsheets are actually not exactly correct. So there are a lot of nuances in commercial real estate. Things like, when you sell, do you take the next year's NOI or the current year's NOI? When you're doing a DSCR, are you taking the T3 income, which is what Fannie Mae and Freddie Mac usually requires, or are you taking the year one income? All those things, certain spreadsheets have certain things, but not the other. And so we pride ourselves on making the numbers super accurate. And if it's not accurate, then we update it, and it's updated to everyone, every customer that's using it, right? And we have check and balances, whereas compared to a spreadsheet, you make some changes on your local machine, and the spreadsheet is still V2.0 and not updated for everyone. Speed is a huge important thing. When we started underwriting software, I noticed that a lot of GPs have quotes, lender quotes from different lenders, different quotes from property management companies, and they have to create a scenario for every combination of them. Like you have different renovation budgets, you have different property management quotes, and you end up with like 16 different spreadsheets, each indicating which one. Now, how do I know that? When we do a webinar, we have some kind of rent roll. And between the time we get a LOI accepted to the time we have a webinar, a new rent roll has come online. And so then you have to create a whole different chart for sensitivity analysis that you have to put it on your webinar deck. And so we try to make that process a click of a button or actually just pre-done for you. And then lastly, simplicity. The more I look at the current spreadsheets, the more I realize like a lot of the spreadsheet looks like this. Cell B12 is the sum of B16 minus B15. Cool, that's easy. But then B15 is the sum of the products of these two columns on some other spreadsheet. And that spreadsheet depends on the month-over-month trajectory of other spreadsheet. And then you just go down this rabbit hole of like, what is the math going on? What we try to build is we want to build a lineage of all how the numbers relate to each other. So one day you can actually talk to it like how you talk to an agent. Say, hey, how are the assumptions on this spreadsheet? Tell me more about am I missing? And go ahead and turn this into a marketing email so I can send it to my LPs. And so that's the future that we're going. I'm very, very excited about underwriting because it's the truest intersection between technology and commercial real estate, both of which I'm passionate about. All right, so without further ado, let me go into talking about the software. So, all right, any questions here, you can put it in the chat. We are going to record this, so you'll see it on YouTube afterwards, and we will send a recording with other questions. And I will leave some time at the end for answers, for questions and answers. All right, cool. So the first thing you might notice, we have this pipeline that allows you to say, hey, what part of it is unassigned, what part of it is LOI accepted, LOI submitted, and so on and so forth. Let me go into one deal, say North Haven Terrace. This is what the UI looks like. Okay, you can think of underwriting as it's an operating system. Cash flow portal is an operating system, and underwriting is a mini operating system within the operating system. Okay, it's very, very complex in here. All right, cool. So the first thing you want to do is you want to upload a rent roll, and I already have the rent roll uploaded. AI will automatically parse that rent roll and generate the entire unit types. Basically, we do a pivot table of the unit types.
All right.
And you can go ahead.
I don't think we can. I apologize. Never mind.
Okay, sure. No problem. If you cannot see the screen, yeah, please put in the chat. Sure. So you can see we have this is a pivot table of the unit types based on the unit type. And we figure out the minimum, maximum, average, 25th percentile, and so on. And then you also see the representation in our model of all the units. And then you easily can glance the insights. These are the unit types. These are the rents. These are the leases expire. Now, all of this come to you in like 2 seconds, okay? It's not like you are typing this in yourself. One of the meta points we do is we use AI to make the first pass, but it's not the final pass, meaning that you as human can actually override anything you want. So for example, this is actually a complex table. We say AI figure out that column B is referring to the unit number and that this column refers to the rent. But sometimes your rent roll is relatively complex. And this is a typical rent roll where the rent is actually divided into regular rent, trash fee, pest control, and so on. And so AI is also making a guess, not guess, actually intelligent guess, that row number 3 refers to the rent row, whereas row 4 through 7 do not. And so you can test that on your own, like this is correct. But there are sometimes we got it wrong. AI got it wrong. And you, for this one, you might want to change to hey, this is don't classify this row. So that's an example. All right, so that's the rent roll. The next thing, we're gonna parse the T12. Very similar kind of pattern. This is your T12, and AI actually does the classification on your behalf as the first pass. So things like this is your rental income, This is loss to lease. This is bad debt, vacancy, concessions. And if you want to change these to something else, let's say this is actually loss to lease, just like a spreadsheet, you can drag and drop, and this all becomes loss to lease. So think of it as a spreadsheet within the software. All right, cool. So this is all income. You also notice that we differentiate between income and expense. So I stands for income, E stands for expenses. AI knows that certain rows we do not want to classify them. So for example, it does not classify row 42. And that's because if we were to classify row 42, this will be double counting because this is just the subtotal of the above line items. All right, so that's the T12. So the really important thing here is sometimes your numbers will be off. And I have seen hundreds, thousands of like spreadsheets at this point. Usually it's because garbage in, garbage out. Like if some T12s will have the management fee as an asset management fee as part of the operating income, which is clearly not true. And you have to basically not parse that. You have to unclassify the asset management fee as part of your analysis. So then you can click on generate, and that will generate your income and expense model. Since last time we have this webinar, we shipped this really cool thing called OM. And so this is new, where you basically upload this OM, a beautiful OM. There are lots of OMs in the world, and you can upload that OM. And what we have parsed, check this out. We automatically grab the address of that OM. We automatically grab the photos of that OM. We immediately figure out how many units, rentable square footage, and what kind of roof or foundation or plumbing are in there. We can read that. A lot of the investment committees actually reject a deal purely based on what type of wiring or plumbing or HVAC they have. And so we can help you save that time. If you, in the future, we're gonna allow you to build in some criteria of like, I don't want this type of plumbing, okay? So that's that. So that's kind of the meta information about the deal. Now let me go back to the OM. We also parse the insights. So a lot of times your broker OM will have area information about the area, like is West Dallas, employee and economy, all right? And then there's the population and demographics. This is all the area insights. This is the nearby employees and the information about every employee, all the amenities and the attractions, and then the assets themselves, and then all the images. So when we upload the OM, you will notice that all the images got parsed, and we deduplicate the images as well. So you might notice that these two images look very similar, but they are actually from different angles. Like literally when you open it, they look different, okay? And so like these two look very similar, but they are actually different images, okay? So that. Now, so the idea is that very soon you can, there's a button say, hey, regenerate this paragraph so that it looks, I'm not plagiarizing, but I'm just like rephrasing it so I can put it on my webinar deck, right? All the photos are done. And at this point, you basically get a lot of the information you need. Think of us as a mini operating system that basically combines the Google Drive along with the full underwriting model. It's a spreadsheet plus a Google Drive. So, all right, so with that, I'm going to take a quick pause for any questions on the Renro, T12, and the OM before we go into some of the assumptions like unit mix, income, and expenses. Okay? And if you have questions, just put it in the chat there. So here, so then after you do all the data sources, you go to assumptions. The way you, so just a quick terminology. At the top, this is your primary navigation bar. At the bottom, that's your secondary navigation bar, just like a spreadsheet. You can hover over the primary navigation bar and you can basically choose which one you want, or you can click on the bottom. The other way to navigate is you can just type in Renro or like T12 or unit mix, and then that will take you to the right place as well. Okay, cool. So Kyle asked a question, is this a replacement for Excel? 100%. We thought about having a plugin to your Excel, but what we want is, let's say you are, at the end of the night, and you have this really cool deal from your broker, and that has the T12 and the OM and the rent roll. And what we eventually want is you're gonna forward that email to a email that we dedicated for you. That's your account. And because we know you're a customer of underwriting, we will basically parse it on your behalf. The next day or 20 minutes later, you come back, there's the deal waiting for you to be analyzed. So that's the goal. And we cannot do that by just combining with your Excel, right? All right, cool. All right, let's talk about OM. Let's talk about unit mix. Now, here we have quite a bit of customer. It's actually one of the fastest growing segment of our product. I want to be super precise on these what we do and what we don't do. What we do is we do a really good job of parsing the rent and your rent roll and your OM. But what we don't do is we don't help you project the future. Okay? So what does that mean? That means these are the rents. We are simply taking the median rent of your rent roll. Now, when you generate this rent roll, okay, let's go into this rent roll here. Let's upload rent roll. You can tell it to use median rent, average rent, or market rent. But we're not that smart like, hey, this is what the rent should be. And then on the unit mix, the first pass is we're just taking the maximum rent of each unit type. Okay. Now this could get really bad because maybe that property has one huge highest rent. Let's say that one rent is like $2,000. Yes, we're gonna take it. We're not that smart to say, that's not according to market analysis. Because if we were that good, like we should be investors. We should not be creating a software, right? Like if we're that good about predicting the future, we should not be in the business of creating software. So that's the first pass, and this is very important. This, you can change it, and you are encouraged to change it. At the end of the day, no matter how good AI becomes, taste and art are still why you are differentiate yourselves as investors. All right, so that's that. But we give you the tools to help you come up with the right pro forma rent. So for example, I go to rent comps. Some of these rent comps actually come from the OM. So when we parse the OM, we actually parse the rent comps of that OM as well, which is a huge value add. Okay. But there are three ways of getting rent comps. One is getting it from the OM. The other way is to click this button called Get Rent Comps. And this one gives you, say, 2 bedrooms and 1 bedroom. So let me do 1 bedroom and then import. This will go off to a API called Rentometer to fetch those rent comps. Okay. And so once we fetch it, you can filter, say, hey, I want to all the 1 bedrooms, 1 bathrooms, and 1.5 bathrooms filter. And they will filter down to only the ones that fit that 1-1 criteria. These numbers come from an API. So it is your responsibility to still double check them. And if you really want to know kind of the source of truth, there is a shortcut that takes you to Zillow if it exists on Zillow. If it doesn't exist on Zillow, then it takes you to Google search. And then that allows you to open this up and just double check the numbers. As you can see, we're not providing an authority on what the rents should be, but we're giving you tools to find for yourselves what you believe the rents should be. Okay, so that's that. The last thing, which is a very popular feature, is if you have a CoStar subscription, you usually can download what's called a rent comp analysis from CoStar. But that spreadsheet is sometimes difficult to parse, difficult to pivot, table, and so on. You can parse that spreadsheet, and we will parse it in this format, which then allows you to filter and pivot and so on, which is for easy visualization. I hope that makes sense. So there are 3 ways to get your rent comps. One is from the OM. Second is from the Rentometer by doing this, calling an API. And then the last thing is to upload a CoStar report of your own. Okay, that requires a CoStar subscription. CoStar owns the data. They don't have an API that we can call. So all you can do is upload a rent comp from them. All right. So that is the rent comps. Okay, so that goes over the unit mix. Move on. Let's talk about one of the most interesting things. Let's talk about sensitivity analysis. So here is what a spreadsheet looks like. And within it, you can see this is my target metrics. And these target metrics, I can call them whatever I want. I can put them whatever I want. All these blue cells is something I can change. So my target is 1.8x equity multiple. And my IRR, I want it to be 14%. And my cash and cash is 5. I can change it to 4% if I want to, and I just need to save it. Okay. On the sensitivity analysis, if this is above this number, that it will be green. If it's below that number, it will be red or yellow. And so this is what that looks like. I go to modeling, go to sensitivity analysis, and this is the chart that I can look at. So the way you read this chart, okay, is we built a sensitivity analysis where between the purchase price and the exit cap. On the left-hand side, purchase price decreases from the bottom to the top. So at the very top is the lowest purchase price. What that means is you have the best equity multiple, IRR, and cash. From left to right, exit cap decreases. So in the right-hand side is the lowest exit cap, which also means the best numbers. So in the upper right-hand corner, you have your best numbers. In the low left-hand corner, you have the worst numbers. And your job is to basically inspect this chart to find the best number that will fit your criteria. So with the current purchase price of $32 million and a 6.5% exit cap, we're looking at a 13.9% IRR. What that means is that suppose I don't know the future and the exit cap increases to 7%, then I'm looking at an 11% IRR. Does that make sense? So then what price do I need to offer such that I still guarantee to be above my IRR threshold? And that number turns out to be 30% in this case, 15.3. Now, obviously, in some markets, you're not able to get that number because they're going to sell it to the highest bidder and so on and so forth. But at least that gives you a ballpark of your sensitivity analysis. Going back to a typical spreadsheet, this is extremely difficult to simulate, right? I've been there, done it, where you basically change the purchase price, you have a separate table, you log that IRR, equity multiple, and cash. You change the exit cap rate, and you build this table by hand, right? And then, you know what? When your rent roll changes, by the time your webinar comes around, you're going to build this table one more time. And then a month later, you're going to build it one more time. But here, it's literally just automatically simulated for you. And that's why we decided to use a software instead of building on top of a spreadsheet. All right, so that's what that looks like. After you enter all the numbers, you're going to click on this pinned, and that will pin the numbers to the top. All right, so this is a 13%, 13.9%, percent IRR. Okay, I know I went pretty fast. So if people have questions, feel free to put it in here. I hope people are following along. So the reason that we remove the pin, the metrics, is that we want you to kind of fill in the assumptions before you look at the numbers. We don't want these IRR numbers to kind of detail what you put. Put in your assumptions as truthfully as you want, and then you look at the metrics at the top, and you can unpin them, pin them, and so on. Okay. All right. And then the last thing I want to show you is let's go to unit mix. So remember, we have this rent roll and we parse the rent roll, and that comes up with a unit mix. That's the output. But the OM also has a rent roll. And well, so I want to introduce this concept called scenario planning, right? You have multiple scenarios, and how do you switch between them? Under every single one of those assumptions, there's a concept of a scenario. And in the dropdown, you can see there's a scenario for based on the rent roll. This creates your unit mix. But there's also a unit mix that's generated from your OM. So watch this. Right now, by using the rent roll, my IRR is about 14%. Then if I make the OM scenario, the unit mix that's generated from the OM, I can see my IRR changes to 19%. Right. So in most cases, that's going to be very similar trend where the selling broker is going to inflate the numbers. So you see a better number, but you can easily go back. So, 5 years ago when we were doing multifamily, this is something I wish I had. I was like, what difference the broker try to sell this versus what's really in the rent roll. And now I can easily see that with a click of a button. So that is scenario planning. This idea of being able to toggle between them exists in every one of them. So there is a OM, there's the income based from the OM, there's the expense coming from the OM, there's the closing cost that doesn't coming from the OM, there's no OM, and then on the finance, sometimes when they have quotes, they can also come from the OM. All right, so that's the scenario planning. To see every scenario that's currently active, you click on the scenarios in the upper right-hand corner, and that tells you all the scenarios they are currently used in this model. All right. Let me take a breather for any questions, and then we're gonna talk about 2 more topics, and we're good. The next topic will be finances, and then we're gonna talk about waterfalls. But I know that was a lot. That was extremely fast. But so far, anyone who wanna kind of like unmute themselves, maybe just say something. Are you folks following? Any comments?
I'm following, but it's good. I just think you have to get in there and dig into it to really kind of see how it works, right? I mean, I did one a long time ago, and it's a totally separate company, and it was just it was a lot of work to put everything in. So it sounds like you've kind of solved for that, which is, it felt like as I'm going to put it all into this, I might as well just put it into Excel. But you've clearly solved for that piece of it. So I'm anxious to try this myself. Thanks, Greg.
Yeah, absolutely. Yeah, great, cool.
Hey, Perry, I
Go
think
ahead.
OM edition is amazing because we have done this through the rent roll and the T12 extracts. Just by default, when we upload the T12s and rent roll, that's the default scenario and the numbers it takes, correct?
Yes,
Now you have the ability, you have parsed the OM, you can say you can flip to it to
correct.
really gauge the difference as to what performer the broker is giving versus our own performer. That's the key here.
That's the key. That's
And
right.
what if I want to follow that? Then is there a way to just pin my metrics to that scenario? I mean, use that as a baseline, flip to that.
Yeah, good. So you can flip to it by going to any one of them and then say, hey, I want to use the OM's expenses, make that active. And then you watch what the IRR changes, how that changes.
So I can break it down between the OM revenue and the OM expenses. Just leverage the expenses from OM and
Yeah.
leave the revenue. Excellent.
That's correct. Yeah. Right. Cool. All right. Yeah. James asked a great question here. How do you do the expense categories and the options of changing this? So let me take you to underwriting in the top screen. So the idea is, how do you generate this? How do you have these expense categories? This goes back into this software is truly a mini operating system. So let me go to template library. In each one of those, you actually have an expense template. So what you can do is you can go into this template, and I will say, I will give a name, a descriptive name, like Dallas, Texas Class B expense template. And I'm saying that for these expense items, I want to use $350 per unit. But sometimes I'm not even sure. So I'm just gonna use this thing called same as T12. When I have that turned on, it's just gonna use whatever the T12 gives you, which is very powerful. But I know for sure that property tax, I want to use about 1.6 because that area I know. Whereas property management fee, I know for sure that's 3.5% income. But everything else, I don't really know. So just use whatever the T12 gives you, right? So that creates an expense template. That's a template. The idea of a template goes far more than expenses. It also goes into distribution waterfalls. So we have created these templates, waterfall templates, such as straight split, preferred return plus return on capital, pref equity with the preferred return, and JV waterfall. And so depending on which one you choose, you can have different LP-GP splits, which I will show in a second.
Hey, Perry.
Yeah.
Perry, this is Ajay. Hey, quick question. Is there any way you can use T3 income and T12 expenses?
Yes. Anyway, you can T12 income and yes. So that's exactly technically what we do. So let me show you. So on the income, we do have the T12 and the T3. So income is whatever you want. And then on the expenses, we have the T12 income expenses. We don't actually use the T3 expenses here. And then on the loan, this is what we have for the loan. The DSCR, we actually have 3 different DSCRs. We have using the T3 income minus the year 1 pro forma expenses divided by year 1 debt service, and T12 income divided by year 1 pro forma, and so on and so forth. And so that gives you 3. One of them is useful for Fannie Mae and Freddie Mac. One of them is useful for future bridge loans or variable rate loans, and so on.
What I was trying to ask you, basically, you were showing the returns on the top, right?
Yeah.
Where you were changing the one. So sometime we want to see whether T3 income is going in the right direction. So most of the time we want to take T3 income, but T12 expenses. Right.
Good question. Now, my question for that is the IRR is a future projection, right? Here, it actually, so are you talking about the entry cap rate? Because the entry cap rate is using the T12 income and T12 expenses, but you want maybe a different version of the entry cap rate such that it's using T3 income, and that gives you a little bit, maybe say this entry cap rate using the T3 income is a little bit lower, and that kind of tells you that the property is improving because income increases. And so that's what you want. Okay, fair enough. Okay, that is something we can, yes. Yep, fair enough. We do have that number. We do have the T3 income. We just not use it to calculate the entry cap rate. Okay, I love that. Good question. All right, so now I have gone through the scenarios. I have gone through the templates. Let me show you how we use the templates. The way that we use it most often is based on the distribution waterfall, okay? And here is a straight split. This is a 13.9% IRR. And let me just go ahead and import a template. And for the sake of argument, I'm going to use this thing called preferred return waterfall, which is return of capital. And so that's my next most common. Technically, I can also use the pref equity plus preferred return. So I'm gonna use this one. Again, I'm not losing my previous one. I'm just creating an additional scenario. Then once I import that, I'm gonna make it the active scenario, okay? Now, you can see with the preferred return, okay, my IRR is 12.33%. With a straight split, my IRR is 13.1%. So slight difference here. Next, for the sake of argument, that I want to take on a pref equity partner, and the pref equity go on there. Now, with the pref equity, okay, so if I go into pref equity here, I will expect the pref equity, the IRR to increase, and it does increase because pref equity just means I have additional leverage, and that's why the LP's IRR increases. To see kind of how the math kind of works out, let me just walk through this is a little bit of an advanced topic. So in this world, I have a mezzanine partner that's putting 30% of the down payment, and I have an LP, which consists of multiple LPs that's putting in about 70%. And then you have a GP that's earning an asset management fee. The waterfall looks like this. This is a complex waterfall. The pref equity gets their 6% current cash and cash. Then it's an 80-20 split between the LP and the GP. Fair enough. That's during the time you are asset managing. During the time of refinance, this is how it works. We are going to give the pref equity 100% of their capital back. Then the pref equity is going to achieve a 12% total cumulative cash and cash. This is including the 6% current they already receive. This is do whatever we can to chew them up to 12%. Then the Class A gets their 100% of their capital back, and then it's an 80-20 split. Okay, so that's done. Then finally, you look at the projection. If you scroll down, you'll see pref equity invests this amount. I'm gonna zoom in here a little bit. Year 1, year 2, year 3, cool. And then they get their basically 10% IRR. This is 11% IR, which is exactly about 12% cash and cash non-compounding. If you want to make a compounding, it's a click of a button to make a compounding. Very easy. And then so basically a 3 million turns into 5 million. Makes sense. Class A gets a 15% IRR. Basically, they turn their 7.6 million into a 14 million, double their money, quote unquote. And then finally, GP in this case makes a $3 million total fee. They don't have their investment, right? And so they made about $3 million over the course of 5 years. Okay. Now, GP might make some investments, like let's say they put in $1 million. Well, their 1 million is just part of the Class A. So that's why from a waterfall perspective, GP this is the sweat equity, and then whatever their investment they make is just part of Class A. You might say, hey, GP has a special privilege. Some of their investments are not subject to waterfall. That's okay. Go to classes, create one more class. You call this one GP LP class, like basically GP's investment class, and that's not subject to a waterfall. Waterfall is a really, really complex topic, right? But the reason that we're able to solve those waterfall scenarios in underwriting is that it's the same calculation or the automation that's being used on cash flow portal. Okay, it's the same software that dictates how money gets distributed. So that's why when we come to this waterfall, it just works because that's the same code that's being used to run everyone's distributions. Okay, so that's why this is very, very cool. So and so you can easily swap between the two and see which one gives you the best kind of IRR for your LPs. Obviously, this pref equity is the highest IRR. It's also the most leverage. So be careful about that. All right, so that's that. Now, last thing I want to show you. So let me switch back to the straight split because I like to see a 13% IRR. That's cool. Okay. Now, if I go to finances and uses, the last thing I want to talk about is what if you do a refinance? Okay, so here we go. This is super easy. I'm going to come up here. I'm going to click on this thing. I'm going to make a copy of this guy. Okay, and I'm going to make this active and I'm going to rename it 7% LTV with refinance in 3 years. Confirm this guy. Okay, very good. So this is my new scenario. And I scroll down, go ahead and turn on my refinance scenario. Cool, this is my refinance. I'm gonna refinance in 3 years and 6% refinance cap rate. And let's say for the sake of argument that something really good happened in 3 years, that it's gonna be a 5% interest rate. And I'm going to save it, right? Cool, very good. IRR has increased to 15%. So without refinance, IRR 13%. With refinance, with refinance, 15%, which is great. Now, with the refinance, you can check that the numbers are actually coming in through the refinance. So if I go back to projection here, scroll down, you see, now I only have Class A, Class B. You see on the 3rd year, it actually shows that this is the refinance amount. Okay? And then let's make it even more complex. Let's do the pref equity guy. Okay, pref equity straight split. And that's fine because at the time of refinance, you basically pay off the pref equity folks. And then after that, you don't pay them anything. Okay, so technically, in this case, you don't have enough to pay them off. So you still continue to pay and so on and so forth. But there is a possibility that on the 3rd year, you basically eliminated that pref equity. That's fine. Okay, so you can plug and chuck all kinds of scenarios. It's gotten to a point where basically spreadsheets couldn't do what you can do here. So it's just a lot more advanced than a spreadsheet. All right, so I think that was a lot. So to summarize, it is both used for a kind of someone that's an emerging GP looking to do their first deal. And we have multiple customers that actually start with underwriting and then got a deal under contract. And they're using Cash Flow Portal for the equity raise. And they really appreciate that kind of end-to-end. And it's also for folks that are super familiar with underwriting and they just want to speed up their process in underwriting deals, so they can underwrite more. So that's what we have. Now, what I would like to do with everyone is the following. We try to help folks that kind of already are in actively underwriting. We are not a mentorship group that teaches you how to underwrite. Like a lot of times, people come to me and say, "Hey, can you tell me if my underwriting is like good or bad?" I'm like, I don't know the answer. I only know how to use the software. I don't know to tell you that this is good deal or bad deal. Yeah, but I would love to set up a weekly call where I can do a one to many call where people can just bring in their underwriting their questions about the software, like, "Hey, I'm trying to set this particular way of doing the deal, can you help me set this up? How do you set it up in your software? Because I know how to do it in a spreadsheet, but I don't know how to do it on your software." That I will be happy to help you. The time is going to be Wednesday, same time, 10 a.m. Pacific time. So if you're interested in that, here's what we're gonna do. We are just going to just put a thumbs up in the chat, and then we're gonna download this chat, and then we're gonna add you to that event invite. There's no lead capture for you can just put it under the message there. So if you put a thumbs up. Thank you so much, everyone. So I all add everyone that's interested into that event, and that is a ongoing weekly sync. You can ask any questions, and this is just so that I don't do like 10 one-on-ones, whereas we do 1 to 10. And I'm sure that your question is pretty common. Sometimes the software has a bug, and we need to go fix it, which is fine. All right. I love it. So this is good. Again, the call is not to teach you how to underwrite. We assume you know how to underwrite. We're just gonna teach you on like, hey, this is a tricky scenario. How does your software handle that? So so that's that. Like, for example, we one of the things we are adding just to talk about kind of what's the roadmap coming up. One roadmap is we parse this kind of OM. We have beautiful images. We're gonna be able to click a button to reward this. We're gonna have a button that will export this into a beautiful pitch deck. We have a PDF already. Like you can download this PDF. It's actually under modeling, summary. You can export this thing. You have your photos at the bottom. But this is, it's okay. We can do a better job in the aesthetics of this photo. So that's one thing we're working on. The second thing we are working on is we want you to be able to forward your OM and your Renro to an email address, and then you come back 20 minutes later, everything is parsed. Now, you still have to go in and then check the pro forma yourself. You can't just rely on these numbers, because otherwise everyone's making the same offer. There's no point on that, right? So there's that. So that's something we're gonna work on, which is making your process automated. And then the last thing is we are gonna get even better on the rank comps. So on the rank comps, like for example, these are the rank comps, and we're gonna tell you which one you should most likely pick. So that's coming up, right? And then obviously there are ways that eventually we want to be able to say, hey, I got my underwriting. Can you just like create a marketing email out of this thing? Because we have this concept of an AI generated, transactional emails for your asset management. Can you just create a marketing email so I can start raising money? Once you raise the money, just to be clear, asset management will come into play, where you will aggregate the data from AppFolio and so on, and you can compare it against your underwriting. Does that make sense? You want to compare that against your underwriting. Now, you don't have to show it to your LPs because it's by default not showing. But if it's looking good, then you click a button to show that, hey, we promised this much on underwriting, and here's how we did. So you have, again, going back to this spreadsheet, we really want to create an end-to-end financial app for commercial real estate, right? You go from underwriting, going to marketing that deal, and that should be controlled by AI, to raising the money, which manage all your LPs, communicate with your LPs, asset manage your deals, And then if you have funds with assets, that's fine. We can manage the fund admin as well. So that end to end, that full life cycle of a commercial real estate, right? Now, you can say, how do I know, what cap rate is, what all these things? Yeah, like I was a GP. I know exactly what it means when your exit cap is like 20 basis points, 100 basis points higher than the entry cap. Like, and it has a visceral feeling to me. And so I want to create something that that does not get in the way of your taste and your market insight. That we cannot help, but we want to make the process extremely easy for you to underwrite and just move on from this deal if it doesn't work out. Okay. All right. Any questions? I think that's pretty much it with the last 10 minutes. Cool.
I have Perry, I have a quick question. So
Yes.
while you're doing the underwriting, this is a very good performa matrix overview. So once you, for example, once we get the project, accept the project, it's actually running for performa for 5 years, for example, holding period. Do you guys have a comparison that, okay, based on my project that I projected and versus my every year active operation, do you guys has a variance comparison says, okay, I'm still on track or this is totally off track based on the current market scenario? Can I feed in data from third party? For example, we're using billions to record our P&L for this asset. Can we feed that in, or is there a comparison of
I love it. So 1 second. 1 second. I love what you said. That's exactly what's on the roadmap. Let me just go into our notes here. I have a lot of notes. Okay, cool. All right. Let me just drag and drop this thing here. I'm gonna go into here. So this is what we covered today. So you are talking about asset management, and this is the notes directly from our team meetings. What's consists in asset management? You are able to create this customizable charts. It's going to sync with your property management softwares. You can download data from your portfolio and your building and your Yardi of the world. You can ask them, say, hey, I don't know how to read these financial reports. Just tell me, am I on track? You can do various analysis and alerts because your property management software probably doesn't do that. You can do budgeting and forecasting. You can compare it against the market benchmarks and compare it against underwriting, like what you initially promised the LPs. And then you can do some kind of a marketing lead tracking, like because all the PMS is not that great. Track your CapEx budget and actual. Do loan covenants, like, hey, we should tell you, like, is this a good time to refinance based on the data out there, based on whether you are on track. You can do refinance and exit planning. So you're basically using underwriting in the middle of your deal. That's totally fine. There's nothing theoretically not possible about it, right? In fact, people do that with a spreadsheet. We do anonymity detection, and then we have ChatGPT, GPT power insights and summary. You have a bird's eye view of your entire portfolio. It doesn't matter if they're using portfolio or billion, because we are the central financial command center, right? And then finally, you can output it to an Excel that you send. So, but in order to build that, we have to go through this very difficult journey of parsing a rent roll, parsing a spreadsheet, parsing your box score, and that's what we're working on. And so, do all the hard things first, and then when we combine them, this is a dream of being able to create a financial center, a command center for all your deals. That's where we're going. Yeah. So thank you. I appreciate that you wanted that. That's already on the roadmap. Yeah. Yeah, that's right. So great question. Other questions? All right. I think that's all good. Thank you everyone for the thumbs up. I'm gonna save this chat. And then our team in the next few, so timeline in a week, we send out the webinar recording along with some questions. And then, yeah, go ahead, Jerome, question.
Will the app have API access?
Good question. So it will have API access through Zapier and these things. API access is difficult. And you can argue that CoStar also doesn't have API access. But yes, there will come a day in which we do have API access, but that's most likely for enterprise customers. Yeah, so there's that. And the last thing I will definitely tell folks is you can come in. So the pricing is very, very affordable. It is going here. It's $49 per seat per month. That gives you 5 new deals. And then if you want 20 new deals a month, it's like $79 per month per seat. And then there's the unlimited version. So there's that. As of now, like as of today, we still allow you to have 3 free deals. So go ahead and sign up for 3 free deals today. You can test it out. If you don't like it, don't pay. You're not putting your credit card. But as underwriting gets more and more sophisticated, it is very possible that we remove the 3 deals. We might reduce it down to 1, or we might even remove it to 0, because that's what every other software does, which doesn't give you a free deal. But right now, we feel like we still want to get like folks to try it out before they believe. What people typically do on those 3 deals is that they underwrite it, they have their own spreadsheet, and then they compare the data. When you compare the data, remember just compare the NOI. If the NOI is different, make sure the income and expenses are the same between the spreadsheet and us. If those are the same and your numbers are still different, it's most likely the waterfall. And so that's kind of what we're gonna cover in most of those meetings in the future. It's like, hey, my spreadsheet is different. What's it? Usually it's like we are right. Like I have not seen a time in which like our numbers are wrong. That's because you build it. It's like it's just you cannot change. The code doesn't change. So there's that. All right. So 3 deals, take advantage of it. No credit card required. Play with those 3 deals, and then you can upgrade to either the $49 per seat or the $79 per seat. Okay. The unlimited seat, that is something that we have people using. The current price is $199 per seat, but that's not exactly unlimited. That's like 1,000 deals a month. We'll probably never make it unlimited. So 1,000 deals per month, which is basically, I don't think there are 1,000 deals a month of commercial transactions in the US. I'm not sure. So there's that. Yeah. So that's $199 a month a seat, and that's usually for folks like brokers, lenders, and large investment firms. I'm happy to report that we do have brokers and lenders and property managers, obviously, and GPs that are our customers. And so I love how property managers and lenders are using our software. Yeah. To book a demo, the way to book a demo is basically going here. If you want to have a dedicated demo, this is the link. But for folks that want to just like play with it, ask questions, your thumbs up is good, and then I'll add you to a weekly call on underwriting. All right, thank you so much. I think that's pretty much it. Thank you for attending.